Hello there, Maverick Traders. This is Rob Reinhold, and we just wrapped up January option exercision. So we'll be taking balances over the weekend. We'll be doing the accounting on Monday. We will be doing payouts on Tuesday. With the holiday, we will be doing accounting on Monday, payouts on... Because of the holiday, we're going to be doing accounting on Tuesday, payouts on Wednesday, and level advancements on Thursday. So the first month of the year is in the books. Let's look forward. In this session, we're going to go through the news of the week. We're going to look at the broad markets. We're going to go through all of the sectors, score them from +3 to -3. Lots of sector movements this week. And then I've got about 4 trade setups for you.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Before we jump into trading, we need to cover fantasy football. So this, I think, was our 10th annual fantasy football tournament at Maverick Trading. And we had 5 pools and so much fun this year. And hats off to our grand champion, Kelvin. Kelvin went 15-1, just a fantastic record. And then you can see the pool winners also got prizes. So we have a great time with fantasy football. And for any of you that are interested, I do a podcast with one of our Forex traders on the No Nonsense Forex channel on YouTube. It's called the Trading Psychology Podcast, and we just recorded an episode on how fantasy football can help you with your trading, or the things that you do wrong in fantasy football that you do wrong in trading. It's going to be out in a couple weeks, so it's not out yet. But if you want to take a look at that, I think it's a very, very interesting take on both trading and fantasy football. And poker. I always advise our traders to learn poker as well to really help you with some of the aspects of trading, especially the psychology part. So had a great time. Our next sports event will be March Madness, NCAA basketball, obviously in March. I also have a little bit more news here. We have officially opened up our summit registration. So if any of you have never been to a summit before, they are awesome. They're so much fun. We hold them in Vegas, Chicago, and New York. And this is a great time where you can come and meet face to face. Trading is a lonely business, especially online trading. And it's so great to be able to come in, meet other Maverick traders. And I'm not saying you're going to make friends with everyone, but most people, they meet people they just click with, and then they go home and they've got lots of people that they talk trading with, people in their own cities sometimes that they can meet up. It's just a really cool thing. So we sent out an email to all of our members with the link to register for it. If you have any questions, go to that link and we have basically answers to all the questions you may have. So if you need that link, please contact one of us and we will send it to you. But we're very, very excited for it. Always a great time. All right, we covered some other business. Let's get into the world of trading. Right, this week we had a nice rally, and it was the best week since the week after the election. So things were up about 3 to 4%, and it really came from the better than expected inflation numbers. And early in the week, we had the 10-year bond up to 4.8%, and it was really putting a lot of pressure on equities, especially the Qs, all the tech stocks in the Mag 7. As soon as that CPI report came out on Wednesday, we went from 4.8 down to 4.5, and it really helped the market go higher. And we also had the first quarter earnings begin, and we got lots of bank earnings. We got JP Morgan, we got Goldman Sachs, we got Citigroup. Pretty much everyone across the board had really good numbers, and financials was the best sector of the week. We also heard from Taiwan Semiconductor, one of the biggest semiconductor companies in the world. They beat and raised guidance as well. So just positive stuff all together that really took the market from being more bearish than bullish and really flipped it to where it's now looking much more bullish. Talking about those inflation things, here we had core PPI and PPI, less than expected. Then we got the CPI, and it was also less than expected. Before these reports, people were worried that we weren't going to get 2 rate cuts this year, and the numbers started to come down on odds. Once we got these, the numbers went right back up, so people are much more confident that we are going to get some rate cuts from the Fed. Other news of the week, it's just some really kind of crazy stuff. Philly Fed at 44.3, that is a monster number. But then we got the New York Empire State at negative 12.6. These are crazy numbers. They are very, very volatile. And retail sales, slightly less than expected. But 0.4%, that's still a very, very strong number. So we continue to have the economy just fine, inflation just fine. This is what we call the Goldilocks economy. Not too hot, not too cold. And you can see that the market really liked this week. Dow up 3.5%, S&P up 3, Q's up 3, Russell up 4, oil up, gold up, everything up across the board. And if we look at the charts, I want to really show you we had been making lower lows and lower highs. We broke down, we rallied lower, we held, we rallied lower, and then we broke down lower. This is just a downtrend. That's literally what the definition is. But I want you to see what happened on Friday. Friday, we had that pop. We are now not only above this trend line, but we are also now above the moving averages. And at Maverick, we've really used these moving averages, specifically the 50-day moving average, to really say this is an uptrend, this is a downtrend. If this was just a normal day in the market, this would be the first technical sign of a reversal in the markets from a bearish move to a bullish move. That doesn't change based on what I'm going to say next. But as always, we have to look at the entire market and what's happening in the world. We have a pretty major thing happening on Monday. Now, markets are closed on Monday for Martin Luther King Jr. Day, but we're also getting the presidential inauguration. So we're getting a new administration in, and President Trump has said that he is going to be issuing executive orders on day one. Well, day one is either Monday or Tuesday morning. And in these executive orders, they're estimated to be making about 100 executive orders. Typically, presidents make about 15 to 20, 100 executive orders. And expected in these executive orders are things like tariffs. And we've heard already from Canada has already been preparing retaliatory tariffs. So based on what comes out in those executive orders, again, there's going to be things about immigration. Is there going to be mass deportations? What's that going to do to the U.S. labor force? Looking just at technicals, we just got our first sign that markets are going to go higher and likely go up and make new all-time highs. I'm not ready to flip the switch to a rally cap yet because I want to see what happens with these executive orders. We're going to be getting them on Tuesday. We'll see what's going to happen. But look, I'm not ready to say we switched to bullish yet. Give me one or two more green candles. Look, I'll jump right on board and say, okay, we're going to go up to approach the highs and probably break above them. But I'm not ready yet. Taking a look at the Qs, same thing. We had a downtrend. We had a gap up today, and we pretty much held the gap. This week, it was an up week. We saw pretty much everything across the board. It was up. So this heat map doesn't really tell us anything. So going forward this week, like I said, give me one more candle. Give me one more candle. If it's an up candle, I'll feel much better about switching my stance from slightly net bearish to slightly net bullish. That's what will happen. However, let's say that we get these executive orders and let's say the market takes them poorly and we get a big red candle, then all of a sudden, if we get a red candle and it sinks us all the way back down below the moving averages, then it's no longer bullish. Now it's more sideways. Now it's just more, hey, we're hanging out in this area. So I need more candles to really say that, okay, that was a turning point in the markets. So just be ready for that. Again, the inauguration is on Monday. We could get them Monday night. We could get them Tuesday morning, but likely by the time the market opens on Tuesday, we'll probably have some major news, and I expect there to be some gapping as well. So that is where I'm looking at. I'm in no rush first thing Tuesday morning to put on trades. I think trading is probably going to be a little bit better Wednesday, Thursday, Friday to really just see those next candle or two on the markets. Next week, there is absolutely no economic news to worry about, so we will just skip through this. There's just nothing here. So where are we now technically? I've got us at a plus 0.5. Look, there's one candle above a moving average. I'm not ready to flip. I like to do a little bit of slower to where, okay, give me 2 more candles above it. I'll move that to a solid green. I'll move the above the 50-day moving average to a solid green. I'll go to a plus 2, but give me 1 or 2 candles more. So it's telling me that I'm in no rush. I'm in no rush at all to make a declaration that we're a plus 2. Give me some more candles. I'd love to get to a plus 2. Looking at the sectors, we had a lot of movement in sectors. And if you see here, financial and energy just took off. They were all actually, energy was the strongest sector last week, and it proved to be a strong sector. What really was kind of a surprise is some of the beat down sectors, materials, utilities, and real estate were all sectors that were really beat down. They had monster jumps, and that's most likely due to the break in interest rates. These are interest rate sensitive, so they got that jump. But take a look outside of that. What did well? Industrials did great. Consumer did well. What didn't do as well? Well, take a look at tech. Tech actually underperformed the market along with communication services. So this rally was not in the Mag 7. This rally was in the rest of the market. So I think we can take a look at that and say, okay, the Qs have underperformed a little bit so far in 2025. I think there's going to be better places to hunt outside of technology and comm services. Consumer staples remains the only negative sector on the week. So let's go in and score all these and look at the trend changes. Here, I'm not going to go, again, we have literally 1.5 candles above a moving average. We all know that the markets can pierce lines. They can do things. I need a couple more candles before I go anything past a 0. So I'm at a 0 on utilities. I am at a 0 on comm services. This one's smack right in the middle. One's going up, one's going down. It's where it is. Come over to real estate. We have now rallied. We're now above one of the moving averages, below the other, but the moving averages are still sloping down. So this one has simply gone from a -3 to a -1. We have healthcare. Healthcare now is between the moving averages, and the moving averages have flattened out. So it's actually increased from a -1 to a 0. And you can see just hanging out right there in the center. Moving on to industrials. Had that big rally out the bottom. This was a -3 sector last week. This one's a a positive one, because we're seeing the moving averages turn already. We're making our way up, not ready to go at anything more than slightly bullish on industrials, but it's definitely starting to look better. Then we come over to what is one of the best sectors out there right now is financials. You can see financials. We got a break above the moving averages, and then I have 2 more candles. I'm much more comfortable giving a chart like this a +2 than something that had just barely made the turn. This thing has already proven that it wants to go higher than those moving averages. So financials up to a +2. Consumer, +1. You could look at this and say, hey, just on Thursday it was a 0. If you want to leave this as a 0, I'm fine. 0 +1. But mildly bullish here on the consumer discretionary. For consumer staples, we had 2 days of a bounce, but that did not get us anywhere. We are still below moving averages. Moving averages are still falling. So this is going to remain a -3. This is the only negative sector out there left after this week's rally. Sorry, we have real estate as well. So here we have technology. Was looking pretty terrible. As I said, underperforming for 2025, and we've rallied. We're simply right there in the middle. So this is going to be a 0. Taking a look at materials, had the same thing, a rally. We're moving to a 0 because the lines have flattened. The lines have flattened, and we're no longer in a steep downtrend on those lines. And then energy, last week we were at a 0. We're moving up to a +2, same thing. Once we broke out above that, we got 2 more candles that showed that there are buyers behind this move. Energy looks great. Let's take a look at the movement this week. So our strongest 3 sectors, energy, consumer healthcare, they all strengthened. Energy is by far the best one, but then look at that move. Financials, industrials went from a -2 and a -3 up to a +2 and a +1. Big change in those sectors. And then look at all of the zeros converging together. So we have 5 sectors at a 0, real estate at -1, and staples at a -3. So this is where we are in the market right now. The market is at again, I'm going to give it a 0. Give me 1 or 2 more candles. I'll go more bullish or back to bearish. Here we are right now. It's clear that financials and energy are leading this move, and staples are lagging along with real estate. Everything else is really in the middle. And when things are in the middle, remember, 0, sometimes 0 means it's not moving anywhere. And sometimes 0 means it's in the middle of a trend change. That is the question here. That the only question I have is this just we had a rally but we're still stuck in a range? Or are we going back to a bullish market? We will know within a few days with those candles. So let's take a look at where we are in the slots. Last week we had 6 trades roll off, and after a couple really good weeks of just getting lots and lots of gains, this was a stinker of a week. 1 out of 6 of the trades rolled off was a gain. So not a great end to that January, but we still have some good stuff working. We gave the market a score of a 0 here. I went 0.5. Let's just go to 0 here. So that means I'm not going to have any really aggressive bullish trades or any really aggressive bearish trades. So I'm going to be looking to open up 4 trades this week. Now this is the great part about using these slots and this strategy, is that there is some subjectiveness where you get to decide things, like you get to decide how many trades, and you get to decide, okay, I want to be bullish in these sectors. But you can't be +3. It's saying you literally cannot do it. Now, technically you can do it, but if you make sure that you are following your rules, then you just say, I can't do a +3 trade here. We've already got a bullish trade in energy that's working well, so I want to add a bullish trade in financials. Industrials was the other sector that scored high that we're not in. Healthcare, I'm doing a sideways trade. In real estate, I'm doing a slight negative. Look, this is going to bring us up to only 9 trades. That's fairly light. But remember, this is one of the things you get to decide. If the market starts to look a lot better, I'm going to place more trades and more capital on the line. If it's shaky and not really clear, I simply do a little bit less. So let's go and take a look at some possible trades in some of those sectors and see how we can fill those slots. First up is real estate. Real estate was a -1 sector, so I'm looking for a short here. And he came across this KE Holdings, or BEKE is the ticker symbol. As you can see, this is a downtrending stock. It's actually a Chinese real estate stock. We broke down here, and we've had a little bit of a bounce. And look at this bounce. I mean, this bounce is pretty lousy. We got 4 red candles. We did get some nice buying here on Thursday and Friday, but it has not gone anywhere to where we think this downtrend is over. We're looking to make a -1 trade. The stock is at $17.10. With dollar strikes, we really have to just pick where we're going to go. I think 16 is a little aggressive with where the market is, showing bullishness. So I'm looking to do a 17-18 bear put spread. And you can see that this stock traded all the way up to 17.40 on Friday. That would be great to get filled there. So I want to do a 17-18 bear put spread and just put an order out there to buy it at like 40 cents. 40 cents or 50 cents or 60 cents. If this thing drifts up a little bit more, you'll get that fill, And then this just has to close below 70 by the end of January 31st. So a 2-week trade on this, slightly bearish. Let's move on next to healthcare, where we're going to be a 0, a neutral. Here we have AstraZeneca. AstraZeneca had a really big drop back here off some news, and you can see since that news, they have gone nowhere. And you can see the range is somewhere in the 64 all the way up to the 69 area. This is beautiful. So we just need to do a butterfly somewhere in this area. You're going to try to pick that midpoint as best you can. I'm looking at slightly bullish, so up to the 67. So I'm looking at this 64, 67, 70. So this is going to be the butterfly. The profit area is going to be right in here. Does not look like it wants to go anywhere other than just stick in this range. So this is a sideways trade on AZN in the healthcare sector. Industrials was a slot we were going to fill with a +1 trade, so we want to be slightly bullish. Here we have United Airlines. All the airlines look really, really good here. And just a nice high base. So we came up here, we high based, we broke out, and we're basing again. This doesn't have a lot of momentum at the moment. So I would never choose this to do like a +3 because the momentum isn't there. It had a long base, but then when it broke out, it didn't have any energy behind it. So this is a great little trade here for a +1. Just say, hey, I don't think it's going to go any lower. It's either going to stay here or go higher. So a +1 trade, looking at the January 24th, 106, 108. So 106, 108, look how tiny we're playing this. It just has to close above 108. That's it. If you want to get a little bit more aggressive, great. Go up to 106, 110. Go to the 103 calls. This thing, looking at where this thing could go, I think you could make a case that this thing goes up to 115 on its next run. I'm not looking to be that bullish in the industrial sector yet, so this +1 is going to be just fine. In financials, this is the other strongest sector with energy. We've already got a nice trade working on the energy sector long, so we're looking to find one that's going to be working. This is Capital One. This is Capital One. Now look, Capital One does have earnings on Tuesday. So let's talk about earnings and playing earnings with options. We always say, hey, make sure you check earnings. Make sure you check earnings. Now, why do we say check earnings? Earnings are a very predictable way to say there's likely going to be a big move up or down. Now, look, you have no idea whether it's going to be up or down. You just know there's likely going to be a big jump in volatility. That does not help a butterfly. That does not help a +1 or a -1 trade. That actually hurts that. When you're making, a butterfly, you're saying, I don't want it to go anywhere. Why would you put a butterfly on right in front of an earnings report where it's likely to go somewhere? So earnings for me, I only do earnings on +2, +3, and -2, -3 trades where I want there to be lots of movement. So for me, this one fits. I can absolutely play earnings on this as long as it's a +2. So the +2 I'm looking at is the January 31st, 190, 195 bull call spread. And you can see that, 190, 195 right here. There's going to be a little bit of resistance up here, but we're giving it 2 weeks with a strong market. I think this thing can easily go up to the 200 area. So I'm looking to be a +2 here in financials, as financials is very strong. Let's go ahead and wrap this up. There is uncertainty. If this was any other week, I would be like, hey, everybody, we got the technical signal. It's bullish. Give me another day or two. Give me a day or two of a candle, and I'll be happy to come on and say, hey, we got another green candle or two. We are absolutely now swinging back to the bull side, likely to make a run at all-time highs and put in new all-time highs. That's just what the technicals are saying. The tariff thing has me worried. I want to see how strong these tariffs are and what the retaliation is. The market could react very, very badly to that if it's more than they would expect. So I'm happy to wait for a day or two. That's all it is. I just need to wait. Let me wait till Thursday to really decide whether I want to be more bullish than I am now, or if it is a bad news and it does hurt, I'm actually in a really good place. So I'm ready to give the green light on the bull side after we get through this announcement of tariffs. Remember, the markets are closed on Monday for the holiday, but there's still going to be lots of news coming out. Thank you so much for joining me. Everyone have a great weekend. Goodbye, everybody.